Have you ever wondered why some traders consistently make money while others struggle? After studying the legends of technical trading and analyzing thousands of my own trades, I identified 4 critical steps that separate profitable traders from the rest. These steps aren't complicated, but miss just one and your success rate plummets dramatically. I'll put these exact steps into action with the live trade at the end of this video, showing you precisely how to spot these high probability setups that professionals use daily. This is a system I wish somebody had shown me when I began trading. Trade what you know. Would you buy a car without test driving it? Would you invest in a business knowing nothing about it? Probably not. So why would we trade an asset that we don't understand? One of the most legendary investors, Peter Lynch, shared the same philosophy.
I made money in Dunkin' Donuts. I can understand it.
You could just brew it. It's beans and water.
Oh, damn.
When there was recessions, I didn't have to worry about what was happening. I could go there and people were still there. I didn't have to worry about low-priced Korean imports. I mean, I just didn't have,
Lynch ran a fund at Fidelity and turned it into one of the most successful funds of all time. His philosophy: if you already know how a company makes money, what drives its success, and how its industry works, you already have an edge over the market. If you understand how an asset moves, trade it.
If you don't understand it, it doesn't work. This is the single biggest principle.
And number 2, know the bigger picture. Before jumping into trades, it's important to zoom out and assess the overall market's direction. Trends are not just a passing phenomenon. They've been validated over 100 years of research. Trend following strategies have been used by market giants such as Charles Dow, Richard Wyckoff, and Paul Jones, are proven to work across all market conditions. In fact, trend following has outperformed traditional strategies like buy and hold in both stocks and bonds, with stocks nearly doubling the return of bonds over the long term. So when you're trading, remember this golden rule: cut your losses, let your profits run. Whether you're using moving averages, chart patterns, or breakout strategies, understanding market trends will give you the edge needed to cut through the market noise and make better trading decisions. Before you dive into your next trade, take a step back and ask yourself, do you truly understand the big picture? Knowing the market context is key for making informed decisions and to set you up for long-term success.
So the bigger picture on this trade is going to be trending to the downside. So if we zoom out, we're on the hourly, you can see the bigger picture. It gives us a little bit more market context. We can see things are looking pretty bearish just from the bigger picture context. And if we zoom out to the daily chart, it gives you a better idea on exactly what that looks like. I know we've all seen this sell-off that we've had recently, and now we're getting a little bit of a consolidation, a slight rally to the upside, volatility coming in a little bit. But if we really zoom out to the bigger picture, we still have more room to the downside. So that's what we're going to be looking at right now.
Number 3, visualize the battle lines. Want to know where the market's next move could be? It's all about visualizing the field of play, just like a chess player planning their next move. The market is constantly engaged in a battle over value, and you can see this happening in real time. By drawing trend lines at key levels, you're identifying where the action is taking place, but more importantly, where the market might be headed next. Think of it like a game of chess. In the mega popular series Queen's Gambit, the main character, Beth Harmon, visualizes her moves on the ceiling above her as she plans her next strategic play. Similarly, you can visualize your trades by plotting key levels on a chart, areas where price has consistently reacted or where momentum might shift. This gives a clear view of where the market's battle lines are drawn and where you should put your focus for the next big move.
And the market looks like it's had a pretty aggressive sell-off this morning. So what we're going to be looking for is another short. And I'm going to be targeting these levels down here. So I want to target this day low, which is going to be over here. I want to target the day low, and that's going to be my prime area of interest. And I'm going to zoom in now to the 5-minute chart because we're going to be executing on the 5-minute and the 1-minute. If we get a lot of selling, a lot of rejection at these levels, I want to look to go ahead and target this day low. You can see over here, I'm going to put a vertical line just to show you what time the market opened up at. We've had a pretty aggressive sell-off this morning. So if I go over here, 9:30 o'clock Eastern is where the market opened up at. And we're going to be patient. I'm going to be looking for shorts. So what I'm going to do now is I'm going to go and look into the 1-minute price action. These are the levels that I'm looking at. These are the levels that I'm targeting. Because I'm waiting for the market to rally a little bit, I want to get a little bit better of a risk to reward. So that's what I'm going to be looking for.
And number 4, let volume speak. It's the key to understanding market participation and the intent behind price movements. Volume is one of the most powerful indicators you can use because it doesn't lie. It reveals the truth of market participation, how many traders are behind a move, and how much conviction is driving it. When combined with trend lines and value areas, volume gives you a clearer picture of the market's intent. Just like when a stock breaks through a key resistance level with massive volume, it often signals strong bullish momentum. Conversely, low volume in an uptrend could indicate lack of conviction, suggesting the move might lose steam. It's the market's voice telling you whether the price movement is backed by real activity or just noise. When your analysis lines up, it's time to trust your strategy. By using market context, your familiarity with the product, and technical indicators, you create a solid blueprint for confident execution.
Come over here to the trade page, and if we go over here, this is what it's typically going to look like whenever you see the options chain. We go over here to active. For anybody that's trading active futures, it'll give you the option to pretty much be able to buy and sell on demand without having to go through the confirmation page. So it's a little bit quick. So we're going to be utilizing that for this example as well. I like to change mine to market orders. I know it's a kind of controversial. I know Dr. Jim sometimes thinks it's crazy that I'll use market orders instead of limit, but sometimes these entries happen so quickly that I just need to get filled immediately. So I also have the safety off to where it's not going to ask me, I want to confirm and send this trade. So what I'm going to do now, I'm going to sell one. I automatically got filled. Okay, and we're going to be targeting this loan. We're going to find this text box. One thing I want to make clear is, yes, I have a profit target, but I am mainly paying attention to my risk on the trade. So I want to start off using one contract, and I'll show you where my risk is going to be. So this is going to be my target/exit. That's what we're going to name it. And then I'm going to get another text note, and I'm going to have my risk at one of the highs that was put in today. So we're at about 19,735, 19,000. We're going to put it at around these levels here. So our stop loss is going to be around these levels, and we're going to name that our risk just to give us a visual component of what we're looking at. So our risk is going to be at this level, and I will also draw another line just to give another visual aspect to where the risk is on this chart, right? And I'm going to be risking towards these intraday highs that we were putting in after the sell-off, right? I mean, technically the high is going to be around these levels over here, but this is a level I'm going to be most comfortable with, especially because we're consolidating and we're trading within the price range where about 70% of the trading activity occurred last week. That's also why I'm confident to take the short, and that's just adding a little bit more confidence and context to the trade overall. So we're going to put that line there. We're going to risk here, and this is going to be our potential profit target. And now that we have our risk limits in, we have our profit targets in, from there, it's going to be just a game of being patient. In this example, we're not going to add to our position, but if we were to add to our position, we would have to adjust our risk. So we'd either pull our risk down a little bit, or we would be comfortable with taking on that additional risk if we keep our risk parameters the same, or the level where we would exit our trade. So we'll go ahead and let this play out. So I want to show you guys right here exactly how we can exit this trade if it comes to a point where we need to exit. We'll go back to the trade page, and because we were shorting, we need to buy that contract back. So when we come over here, buy that contract back, I'm going to hit buy, and then I'll be completely out just off of the click of a button, and I can manage my risk doing that. So I want to point that out. The active trader page will allow you to execute a little quicker on demand by the click of a button without having to go through that follow trader page. So
remember, whatever product you choose to trade, you'll notice that they tend to have their own personality. And the more experience that you have with a specific product, the more you will understand its personality. And remember, when you understand the market's overall or bigger picture context, it's going to give you more confidence to execute in real time because you understand what's going on the higher time frames, and that's going to give you the confidence and conviction to execute on the smaller time frames. Remember, volume is a true indicator to let us know where market participants are interested in the market, and it tells the truth behind all market intent.